I wanted to talk a little bit about financial diligence. So I don't like accounting either, but it has to be done. So a couple must-do items. Do not trust their P&L. You're going to have to verify all info for yourself. You can ask for bank statements to do this. A lot of times you can export them in Excel format, and that makes it a little bit easier to be able to summarize or just sum up all the expenses and kind of manipulate the data. But you have to do this. Ask for the bank statements. Make sure it trues up to their P&L. If you see something off, you can absolutely ask them to explain the differences. You're also going to want to get read access to Stripe, Paddle, etc., whatever they use. You're going to want to verify those customers. There have been a couple cases that I've heard about. It's never happened to us, but some of the customers in there could be fake. It's relatively easy to fake some of this stuff, right? You have a customer that's a friend of yours that pays for a couple months, and you just end up reimbursing them through Venmo yourself, right? There's all kinds of shenanigans that can be done. Of course, it's rare, but do yourself a favor and just get read-only access to Stripe. Ask for the bank statements. Make sure both of those things true up to the P&L. And again, if there are any differences, it's fair game to ask them. Nothing is going to substitute talking to customers. So you can in Stripe sort by the customers that have paid the most, and if they're still subscribed, or even if they're not, ask if you can speak to those customers and get their experience. You want to feel out for these important customers, especially if they're on an annual plan. Are they going to renew? Again, a lot of these companies are not going to have sophisticated product analytics to tell you on a per user level or a per account level who is and is not using the app and how much value they're getting. So talk to customers, make sure, especially for those high paying customers, that they are going to come back. I do want to go through and take a look at one P&L. So this is a P&L from the software. So the product I'm using is called Puzzle. We don't have any affiliation, but this is just a random company in our portfolio, and I just kind of wanted to go through last year's some of the financials here. So common items in P&L, we have the subscription revenue. So in this case, what Puzzle does, and this is a little bit funky, so they'll have refunds in here, which is great. So this top line number in December, for example, 12,143 minus 800 in refunds. They also count discounts. So if you give like a 20% off discount or whatever, that will come out here. So our actual kind of net top line subscription revenue was 8,328 for December. If they have access, if they can give you access to something like this or QuickBooks, a lot of these things will be relatively the same at a high level. So next, going down into transaction revenue, there's nothing that important here other than you want to make sure ideally all of their income is coming from Stripe. Sometimes with bigger customers, they have ACH payments coming through where stuff can get a little bit more complicated. But if 100% of their stuff is coming in through Stripe, then you have a much easier time. When it's coming in through ACH, you're going to have to kind of dig around in here to true up how those customers are paying, how long they've been paying for. It's just a little bit more manual on your side, but again, it has to be done. Um, Going down into cost of revenue, so you want to see something like some kind of hosting fees. So we do most of our stuff at Excel on Google Cloud, including this product. And so here are the hosting fees. So 100, 776. Before this, we had some credits. And after this, actually, we have some credits. So it's important while you're looking at this information to make sure that they are, in fact, paying for hosting. And if they're not, you're probably going to have to pay for it. So you're going to have to add that back in here, and that P&L is not going to look as nice, or the margins are not going to look as nice. We'll take a look at another example from a different company in a different format, just to give you a sense of what that can look like too, when a company stops paying for hosting fees because they have credits or some other reason. So processor fees, this is pretty standard. You want to see kind of Stripe in here, whatever their payment processor is. Let's go into operating expenses. This is where stuff starts to get a little bit nitty gritty. So I run for this company all of our independent contractors through this P&L for this LLC. So every independent contractor expense is already in here. If I were to go break this down, it would be in mostly Wise payments. So we use Wise to pay all the independent contractors, except for one, and that'll show up in here. What is interesting though is in salaries. So this is actually money that we took out. So if you are looking at the business as the new owner, this is actually profit paid out to us as owners of the business. This should and is oftentimes removed from the P&L as an add back. And this is what, if you've heard the term seller discretionary earnings, basically you're the new owner. What is all the cash flow that you can play with and decide how much you can pay yourself or decide to allocate elsewhere? That's often what's meant by seller discretionary earnings. You would have all your independent contractors, maybe your employees, and you would remove out, in this case, all the salaries. There's just one, and it's just us paying ourselves. But you could back out all the other employees' salaries, add that up, right, and then separate out your salary, or some people pay their kids or their spouse, etc. You got to kind of do all that legwork if this is in here to understand exactly how much cash you have to play with on a monthly or an annual basis. We don't do in sales and marketing, we don't really do that much advertising for this one. We've done a couple experiments, but if we did more, they would be here in advertising. In this business development and conferences section, actually, this is where our affiliate revenue is coming in, or affiliate revenue that we're paying out. So that's also an interesting place to look to see, do they have an affiliate program? If not, why don't they? If they do, how is it actually working? Who are the top affiliates? Can you go and talk to them too? Diligencing a growth channel is also a great use of time during diligence. Technology and software. So this is where you want to get into exactly what they're paying for to do what they do. So we pay for Rewardful, Turnkey, Twilio. We have to pay Twitter for their API, Intercom, Mailgun. So a ton of really standard stuff in here. But still, you want to go through here and make sure that you understand everything and where stuff is coming from. In particular, when people are using like OpenAI or any kind of large language model provider, a lot of these costs are going to increase linearly with the number of users. So, we have an AI writing tool. Every time we get a new customer, our variable costs go up too because we have to pay ChatGPT or OpenAI for every API call. And so new users make new API calls and that increases our variable costs. So in here, you should be able to see if any of these costs are fixed or if they're increasing, right? So GitHub, we've, come up and down when we hire new people or need to add people to GitHub. I wouldn't really, I mean, that is a variable cost in the sense that when we grow our employee base, we have to increase this cost, but it's not like a direct variable cost with respect to an increase in the customer base where every new customer we have to incur new cost. Generally speaking, that's not the case with this particular software product, but it is the case with some others in our portfolio. And that's something you also want to be aware of and watch out for when you're kind of modeling this out for yourself. A lot of times these guys don't have bookkeepers or are doing it themselves or do stuff wrong here too. It's really easy to do. If you see stuff in uncategorized expenses, you might just want to ask them what some of these uncategorized expenses are and or ask them if they can categorize it. That's a fair and valid ask to understand exactly what some of these expenses are that you can't make sense of. So here's another example. This is Screenshot API for calendar year 2023. So revenue, 68,000. Here's total revenue. You can see this layout is a little bit different. Henry on our side does this once a month. So we just kind of have a very simple kind of rolling P&L that we do every month. And it's just straight cash flow reporting. So you probably won't run into accrual accounting. That's going to be more difficult to sort through. Most of this stuff is cash based. And cash is what you want to look at. So if you haven't heard this or this is new information for you, you should write this one down. Whatever Stripe says is the MRR is not the cash that you get when you operate the business on any given month. Those numbers that Stripe calculates are typically, they have their own calculation for it. If you go in and you go to a different provider, they're going to have a different number for you. Or if you use ChartMogul and you plug in the same Stripe data, it's going to have a different MRR number for you based on 101 different ways that they can calculate it. The real answer that you want to get to is this number right here, the total revenue. But the point is that you want to see how much actual cash is hitting the bank account on a monthly basis. That's why a lot of times why in Acquire, they'll look at trailing 12-month revenue as a better number to look at than monthly recurring revenue. Because SaaS can be quite lumpy. So going into some of these operating expenses, so here we had to pay for Google every month, and then starting in October, we got some Google credits and stopped having to pay Google. So our operating EBITDA is inflated because we actually don't have to pay the Google expense anymore. So when you're looking here and it says operating EBITDA margin 98.5%, that's too high. That is not a fully baked cost, right? We are getting um, around $700 to $800 worth of kind of extra cash flow and extra EBITDA margin than we normally would be when we were paying for Google. So here, the month before, our bill was 757 from Google. Operating EBITDA margin was 85.2%, and it jumped to 98.5%, which again, awesome for us, but this is not probably not going to be the case for you unless they transfer those credits to you, which sometimes happens, sometimes doesn't, but it's worth looking at this, noticing this, and asking that question. So in this very simple P&L, we just have Google as an expense here. Total revenue minus Google is our operating EBITDA. We carry that down to net profit and loss, and that goes straight down into net cash flow. So there aren't a lot of expenses to this business. We pay Google for almost everything, and there's really nothing else that we pay for in this business. So this one's extremely simple. A lot of these smaller deals will look like this. They're very, very simple. They might have, three or four different pieces of software they pay for. They use Resend to send emails or SendGrid or whatever the case may be. And yeah, so you shouldn't have any trouble parsing some of these really small deals in this format. And this is the more normal format. I just wanted to show you also. There are some software companies out there that do a really nice job, and Puzzle's one of them. Again, no affiliation. I really like the product, and I believe it's free. I don't. I believe it's free, or they at least have a free tier. A valid question you might look at in here is transfers. What are these transfers? These are transfers internally for us to send money from the screenshot API bank account to a different bank account. So this is where this is kind of the actual cash flow that we took out of the business. That's also an interesting number to note. And then, of course, in this ending cash balance, this is obviously not just the money that we're making. This is just like in the bank account. If you logged in on January 1st or February 1st, what number would you see? You would see this number in here. But again, because we had transferred this money out, we actually made, like 5,000 that month and transferred out 5,000 that month from the screenshot API bank account into our kind of main different bank account. So there's a rough overview of how to kind of parse some of these cash flow reports or just the income statement. I didn't want to get into, or just the profit and loss statement. I didn't really want to get into the balance sheet that much. I think it's less interesting for us to go through a balance sheet. The profit and loss is really what you want to be looking for. Again, the balance sheet is sort of just, it's not going to be the story of what happened to the cash, which is what we're really interested in, which is why the balance sheet isn't really the right report to be looking at. You really want to stick to the P&L report. And then cash activity may or may not be helpful for you. I guess in some ways it's a high level way to orient yourself from the business. So January, cash in 3,800, cash out 173. So net burn or cash generated 3689. Okay, so they made money, made money, made money, lost money, lost money. If you recall, these are actually some of the months where we paid ourselves, which is why it's showing that huge negative. And then December we paid ourselves again. So mostly you're going to be looking at the P&L, but thought I'd also just show a kind of overview of the statement of cash flow, or just cash activity as it's called here. Another finishing note, if you do get a nice P&L that's in an Excel file, or even a CSV of all the transactions, ChatGPT is also a really great asset for you to go into and have it do some light math. And of course, you have to check it. It's not always right. It does tend to get some stuff wrong, but it is generally speaking a useful financial diligence tool. As it's starting to be able to do more math and that kinds of things with higher fidelity, et cetera. So don't be afraid to throw some stuff into ChatGPT and ask it to kind of analyze it for you, and it might surface some interesting things that you didn't quite catch.